The United States government owes $37 trillion. That's more debt than any nation in human history. More debt than the entire global economy produced in a single year just 2 decades ago. And here's what nobody's telling you. They're not planning to pay it back. They're planning to erase it. Not through default, not through austerity, not through higher taxes. Through devaluation, strategic, calculated, invisible theft of purchasing power from everyone holding dollars. And the mechanism they're using is something most people think is separate from government. Crypto and gold. You're watching the US government execute the most sophisticated debt elimination strategy ever attempted. They're building a parallel financial system, accumulating strategic reserves in Bitcoin and gold, preparing to revalue those assets at multiples of current prices, and using that revaluation to technically balance a debt that's mathematically unpayable. But here's the part that should terrify you. When they revalue gold and crypto upward, they're simultaneously devaluing the dollar downward. Every dollar you hold loses purchasing power. Every bond you own becomes worthless. Every savings account evaporates in real terms. You're about to be robbed legally, quietly, completely. And most people won't even realize it happened until it's too late. Let me pull you into a moment when America was flat on its back. The year is 1933. The Great Depression has gutted everything. Shuttered factories, empty soup kitchens that still run out of food. 1 out of every 4 workers has no job, no hope. Bread lines snake around entire city blocks. And sitting on top of this nightmare, the government is buried under a mountain of debt from the Great War and the crash. Debt to GDP already past 40% and still rising fast. Deflation is eating the country alive. Prices fall so hard that people hoard every penny, terrified to spend. It feels like the whole system is dying. Then Franklin Roosevelt does something that drops jaws across the planet. On April 5, 1933, he signs Executive Order 6102. In a single stroke, it becomes illegal, literally illegal, for any American citizen to own gold. Coins, bars, certificates, doesn't matter. You now have weeks to hand it all over to the Federal Reserve, or face 10 years in prison and a fine that would bankrupt most families today. The government graciously offers to buy it from you at the sacred official price, $20.67 an ounce, a number that hadn't moved in over half a century. Terrified, exhausted, and broke, millions of Americans line up and surrender their gold for freshly printed paper. And then, less than 9 months later, Roosevelt unleashes the real move. January 1934, the Gold Reserve Act. With one signature, the official price of gold rockets from $20.67 an ounce to $35 an ounce, an instant overnight 69% surge. The metal itself never changed. Same shine, same weight, same everything. But because Uncle Sam now controls nearly every ounce in the country, remember, they just forced you to sell it cheap. Their vaults magically triple in value. A $4 billion stockpile instantly becomes almost $7 billion. $3 billion conjured from thin air by rewriting a single number. But here's the secret they buried so deep, most history books still miss it. That $3 billion miracle didn't appear out of nowhere. It was quietly, surgically extracted from every man, woman, and child holding dollars. Raise gold 69%, and you automatically slash the buying power of the dollar by the exact same amount. Over the next 10 years, prices across America marched relentlessly higher. The cash in your mattress, your bank account, your paycheck, it all melted, losing roughly 40% of what it could buy. The government watched its real debt burden shrink from over 40% of GDP to about 25% without ever passing a single austerity budget or hiking income tax rates. The families who were coerced into selling at $20.67 looked up one day and saw gold trading at $35, then $50, then $100 and beyond, while they were left clutching paper that bled value every single month. They were robbed in plain sight, and most never figured out the trick. This wasn't some desperate accident. It was deliberate, cold-blooded, masterfully executed. And right now, as you read this, every step of that 1933 blueprint, forced accumulation, sudden revaluation, engineered inflation, is being reloaded on a scale that would make Roosevelt blush. Only this time, the weapons aren't just gold. They're gold and something far more explosive. And the countdown has already started. Keep reading, because what happened next in 1934 is about to look like child's play. Picture this. Right now, today, the United States owes $37 trillion. $37 trillion. More money than any empire in history has ever owed. More than the entire planet's economy generated in a single year when most of us were kids. And the interest bill? $1.2 trillion a year and climbing. That's more cash than the Pentagon spends, more than Medicare, more than every single government program except Social Security, just to service the interest. Not a penny toward the principal, just the VIG. Debt to GDP sits at 132%, higher than any moment in American history except the peak of World War II. And back then, we had factories running 3 shifts and 17 men in uniform to grow us out of it. This time, no war production, no baby boom, no miracle. The Congressional Budget Office has run the models. Treasury has run them. The Fed has run them in secret for years. There is no happy spreadsheet, not one. Raise taxes to European levels? You'd need to seize roughly 60 to 70% of every dollar earned above $100,000. Politically impossible. Cut spending? You'd have to slash Social Security and Medicare by half tomorrow morning. Political suicide. Grow your way out of it? Debt is already growing 3 times faster than the economy. Even 5% real growth, a fantasy, wouldn't touch it. So the math is brutal and simple. This debt can never be repaid in dollars that are worth anything close to what they are today. But here's the part that should make your stomach drop. They know it. Every senator who screams about deficits knows it. Every Fed governor who talks about soft landings knows it. Every Treasury official knows it. And they're not planning to pay it back. They're planning to make it disappear. Not with default, that would torch the dollar overnight. Not with austerity, voters would burn Washington to the ground first. Not with honest taxes. The rich would leave and the middle class would revolt. They're going to make it vanish the old-fashioned way, by changing what a dollar actually is. Only this time they can't just crank the printing press and call it QE. People would riot the moment milk hits $20 a gallon. They need a new trick, a cleaner trick, a trick that looks like strength, not desperation. And that trick already has a name. It's sitting in government vaults right now, quietly growing larger every month. Gold and Bitcoin. Keep reading, because the moment they flip the switch on these 1 and 2 is the exact moment your life savings start evaporating in real time. Let me walk you through exactly how the trick is being rigged, step by cold-blooded step. First, Bitcoin. As of right now, federal agencies already sit on roughly 210,000 Bitcoin, more than any hedge fund, more than any corporation on Earth. At today's price,
That's about $21 billion. Pocket money for a $37 trillion problem. But the game isn't to hold what they already stole. The game is to hoard a lot more, quietly, before anyone realizes why. January 23, 2025. A brand new executive order lands on the desk. It creates America's first strategic Bitcoin reserve, modeled on the oil reserve, but for digital gold. The public story? National security and keeping up with China. The private story? Get to 1 million coins, fast, cheap, and under the radar. They won't be buying on Coinbase with a giant U.S. Treasury label. They'll take it from drug lords, hackers, sanctions evaders, civil forfeitures, fines paid in crypto by exchanges, even quiet mining on...
Clock's ticking. America officially owns 261 million ounces. Current street price? Around $2,800 an ounce. Book price on the government's own ledger? $42.22 an ounce, a number frozen since 1973. On paper, the entire U.S. gold hoard is worth roughly $11 billion. $11 billion for the biggest pile on the planet. Insane on purpose. Because that gap is rocket fuel. One fine morning, the same calm voice returns. To restore confidence and return to sound money principles, the United States will now carry gold reserves at $20,000 per ounce for monetary backing purposes. Same bars, same vaults, same Fort Knox. But overnight, the ledger jumps from $11 billion to $5.2 trillion. Another $5 trillion of wealth created by changing a spreadsheet cell. Add the Bitcoin trick and the gold trick together, $6.2 trillion of fresh balance sheet firepower, invented without printing a single extra dollar the old-fashioned way. And here's the part that will make you feel sick. While Bitcoin is rocketing toward 1 million and gold is blasting past 10,000, 15,000, 20,000, something else is moving in the opposite direction, fast. Your dollar. Because if an ounce of gold that used to cost $2,800 now costs $20,000, the dollar just lost 85% of its value against real money. If one Bitcoin that used to cost $100,000 now costs $1 million, the dollar just lost 90% against digital money. Groceries don't care about reserve accounting. They care about how many of these new feather light dollars it takes to fill the cart. You think you have $200,000 saved for retirement. 3 years after the switch is flipped, that same $200,000 buys what $50,000 to $60,000 buys today, maybe less. The government still owes $37 trillion on paper. But in terms of real stuff, real work, real goods, that $37 trillion has quietly shrunk to something closer to $10 or $12 trillion. They erased $25 trillion of real debt, and the bill was mailed directly to you. Keep reading, because the exact year they plan to pull the trigger is already circling on calendars inside the Treasury. And once that day hits, there is no undo button. Look at the paper trail. It's all hiding in plain sight. December 2024, Senator Cynthia Lummis drops the Bitcoin Act in Congress. The bill says America must buy and lock away 1 million Bitcoin over 5 years and never sell for at least 20. It sails through committees with votes from both sides of the aisle. Democrats who hate crypto and Republicans who swear they love free markets both sign on. Strange bedfellows. Unless both parties already know the debt is a corpse, and this is the only shovel big enough to bury it. 1 month later, January 2025, the new president signs an executive order that bypasses Congress completely. Strategic Bitcoin Reserve is now law by pen stroke. Treasury has handed the green light to seize, accept, or acquire Bitcoin by any means necessary. The press release talks about innovation and beating China. The classified briefings talk about something else entirely. On the gold front, the speeches have already started. Return to sound money, partial gold backing, responsible fiscal leadership. Words that make conservatives cheer and libertarians tear up. They sound like a dream come true until you realize the only way you get from 3.5% gold backing to 25% backing without finding new mountains of gold is by moving the price, not the metal. And overseas, the BRICS aren't waiting politely. China's official number is 2,300 tons. Off-the-books estimates from satellite imagery of refineries and mining output put them closer to 5,000 to 6,000 tons and rising. Russia keeps adding 5 tons a month like clockwork. India just became the world's biggest gold buyer 2 years running. Central banks globally scooped up over 1,000 tons in 2022, another 1,000 plus in 2023, the biggest buying spree since Nixon closed the gold window. They aren't doing it because they love shiny rocks. They're doing it because they can read the same debt clock we can. This isn't coincidence. It's choreography. Here's the calendar they're working from. Mark these years because your wealth depends on it. 2025, the silent build. Seizures continue. Quiet mining contracts on federal land. Fines paid in crypto. No press conferences, no big buys that spike the price. Gold narrative ramps up slowly. Speeches, white papers, think tank reports. You still have time to move, but the window is narrowing. 2026, the manufactured crisis. Debt ceiling theater goes nuclear. Bond yields lurch higher. A technical default scare or two. Markets panic just enough for the public to beg for a savior. In a real crisis, Congress will vote for anything labeled emergency stabilization. That's when the big announcements get the green light. 2027, the revaluation trigger. One morning, the president steps to the podium with the Treasury Secretary and the Fed chair at his side. Calm, confident, patriotic. Today, we restore America's financial fortress. Bitcoin carried at $1 million per coin. Gold carried at 20,000 per ounce. Partial backing of the dollar officially returns. Within weeks, the market prices chase the official ones. Bitcoin rips past 500,000. Gold blows through 10,000 like it's nothing. CPI numbers stop mattering because grocery shelves empty before the new data even prints. Gas hits $25 a gallon in some states. Rent checks bounce nationwide. 2028 to 2030, the new normal. Prices settle. Bitcoin finds a floor around 600,000 or 700,000. Gold somewhere north of 15,000. The dollar buys roughly 25 to 30 cents of what it buys today. The government crows about reduced debt burden and renewed global confidence. Your parents' life savings now buys a used Honda. And the 37 trillion? Still says 37 trillion on the debt clock. But in terms of real stuff, real work, real goods, it's been cut by 2/3 or more. They didn't default. They didn't cut a single check. They just changed the measuring stick, and your wealth shrank to fit it. Keep reading, because the next chapter isn't about what they're going to do. It's about who gets destroyed and who walks away richer than ever, and exactly what you have to do before the trap snaps shut. Here's the scoreboard, and it's written in blood red ink. Winners. The United States government erases $25 trillion in real debt without ever admitting failure. Politicians of both parties never have to cut grandma's check or tax their donors. Early Bitcoin holders, the kids who bought at $20K, $50K, $100K, become the new aristocrats. Early gold holders, the boomers who stacked at $400 or $1,200, just got handed generational wealth on a platter. China, Russia, India, their gold vaults just multiplied in value while they watched the dollar empire burn. The early rich with hard assets, real estate, farmland, energy, factories, everything floats higher in nominal terms. Losers, the middle class with savings accounts, retirees living on fixed pensions, anyone holding treasuries, corporate bonds, or cash. Pension funds that are 40% bonds, goodbye solvency. Workers whose wages rise 8% a year while prices rise 40%. Renters who see rent lords double the rent overnight. Small business owners who can't raise prices fast enough and get crushed. The American dream itself, quietly executed in broad daylight. This is not theory.
Weimar, 1923. Argentina, 1989, 2001, 2020. Zimbabwe, 2008. Venezuela, 2018. Every single time, the story ends the same. Government survives, currency dies, savers get cremated. The US is running the exact play, just wearing a better suit and a friendlier smile. Now, here is your final warning and your only escape hatch. You do not have years. You have months. Do this in this order, starting this week. Number 1, kill dollar-denominated paper. Sell long-term bonds. Sell anything that pays fixed interest in dollars. Cash is acid. Keep only 3 months of living expenses, no more. Number 2, move into unbreakable assets. Physical gold in your possession or allotted vault, 10 to 20% of net worth. Bitcoin, self-custody only, 5 to 15% of net worth, whatever you can sleep with. Productive real estate that throws off food, water, energy, medicine, security. Energy, agriculture, commodities, anything that cannot be printed. Number 3, debt strategy. Wipe out high-interest debt today. Credit cards, personal loans, car loans. Keep only low fixed-rate mortgages, 3 to 4%. Those get inflated away. Anything adjustable or above 6%, pay it off yesterday. Number 4, get some wealth outside the dollar system. Swiss francs, Singapore dollars, Norwegian krone accounts. Foreign farmland, foreign rentals, or at least foreign stocks that earn in strong currencies. Number 5, build what money can't buy when money dies. Skills that produce food, water, energy, medicine, security. Community that you can actually trust when ATMs go dark and grocery shelves stay empty. Week 1, open the gold account, buy the first ounces. Week 2, set up